Diana, was it this morning's job report, or has this kind of been trickling through your head this week as we're getting more comments from Fed members and, of course, Kashkari last night?
Well, we've been sitting on the fence on 2 and 3 for about 2 weeks now, and so this just tipped us over the fence. And I agree with Steve that the CPI numbers are more important than the jobs numbers, because Chair Powell himself said he welcomes strong employment numbers. But embedded in those employment numbers are also a tick up in hours worked. That's great. That's more earnings. But that keeps the underlying demand very strong in the economy. And again, the numbers in the service sector are so strong, 2/3 of the gains in those big three: leisure and hospitality, healthcare, and state and local governments. That's something we've seen for a long time. The good news is it's not quite as concentrated as it was in 2023, which means some of the gains are spreading out a little bit more. We saw some strong gains in construction as well, and retail still holding up in there. I think that's important to see more dispersed gains because we're not as susceptible to negative shocks, but that gets to the risk that Steve laid out earlier, that there could be some upside risks for inflation going forward, given the strength in the economy and the persistence, particularly in the service sector.
And Steve, we've been talking a lot this week about that upside risk, whether you look at commodity prices or elsewhere, but that wage growth, right? A lot of folks are focusing on that number in the jobs report this morning. Does that tell us on the flip side, though, that the Fed has more room? What's sort of the next catalyst? Are we hearing from any more speakers?
Thankfully, I don't think so.
You've been busy this week.
I think I did 15 speakers.
We can all use a break.
I was about to crawl up in a fetal position on the last one, but it was 18 pages. But we got through it, folks. We read it, so you don't have to. That's what we do. That's our motto in the econ department. So listen, I think that the wage numbers are better, are okay, as long as, here's the formula, the wage growth is not greater than the inflation number plus productivity. That is non-inflationary wage growth. I believe we're there. I do not believe, and Diane will always correct me when I'm wrong, that's one of her great attributes. I don't believe Fed officials have talked about wages pushing up inflation. I believe they've talked about the threat of wages pushing up inflation. So that does not appear to be part of their construct of the dynamic right now.
Okay.
Let me just make one more point.
I think that's
Diane, real quick, I want to make a point. On the construction thing, I looked that up. Very interesting. Non-residential specialty trade contractors. Who are those? The people doing the government projects. So we might be seeing some of the infrastructure bill showing up in the jobs report. That's maybe, I got to look back and see historically, but that's what those folks are, 39,000.
Diane, go ahead.
Yep. Oh, and that number was up from, 19,000 on average for the last 12 months, so 39,000. It was a big number. And in a month where seasonally we expect construction to pick up because it's March, and that's when spring usually comes most places, although in Chicago it seemed to be lacking. But I think that number was important too. But more broadly, we're also got a lot of dry tinder in the housing market. It's been interesting to see the Fed officials talk about the persistence of inflation in the shelter sector. That has been interesting, seeing it come out of someone like Austin Goolsby's mouth this week. And I think we've all heard enough from Fed officials, but it's all been more moving down their number of rate cuts rather than moving up their number of rate cuts.
Steve, I wonder if you can break down this idea of immigration and how this is sort of keeping the job market strong and also relating to some of those housing and renting prices.
So I'll preface this by saying the Fed wants to stay away from inflation like it's the immigration like it's the plague. It does not want to weigh in on the politics of it. And what they're doing is they're taking the cards that are dealt to them. The cards that have been dealt to them is much higher immigration. I believe that the CBO just upgraded by like 4 million the number of immigrants that are in this country, documented, I guess, and undocumented as well. Those folks are showing up in the payroll report. They seem to be bodies that we are able to put to work. And what the wages are at those levels, I'm a little bit unclear how much of that is on the books. I believe that they seem to be mostly, or at least ending up in some counted way on the books, on the tax rolls in that respect. So that's an interesting question that we need to get to the bottom of. But immigration numbers are fueling job growth. Job growth is fueling growth. We appear to have a very large demand for labor in this country. Right. And going back to the source of this whole thing, I don't think, I'll get some hate mail on this, but what the heck. I don't think people are leaving their homes thousands of miles away and walking here because they don't believe they have the prospect of getting a job. They appear to have the prospect of getting a job,
right.
And this economy appears to need them to put them to work.
Right.
I'll stop there.
There's opening.